What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 23rd of 2022, and we got a late night edition for you tonight. Let's go through these indexes. We'll go through the box scores, and let's really just talk about how we're feeling about this market. S&P 500 finished down 0.24% on the session. We have the Nasdaq QQQ, which finished down 0.08% today. Our IWM small caps actually finished out positive. They were up 0.16%. While our Dow Jones was down about 0.5%, and our ARK Innovation ETF was actually the biggest loser today. It was also down 0.55%. Most of these indices, they did close towards the lower end of their day's range. We had a slight expansion in volatility, nothing too crazy, and we did have mixed breadth in the small caps, 47% advancers. We did have 54% up volume today, and the trend model remains at a -3. Now, if you watched yesterday's video, you know we were incredibly short the market. Yesterday, pretty much closed up all of our short positions. I just have some VIX calls left on the books. And today, I was really expecting, hey, we might get a pretty violent bounce, even if this is a pretty bearish trend in the market. The fact that we could not even manage to bounce, that is pretty weak, and it really just shows that there are still active sellers out there in the market. Our FinViz heat map really just corroborates that. You can see we had sell-offs in the healthcare sector, and the main area of strength was energy. Now, if you remember the first 6 months of the year when the market was just horrible, this was a constant theme. We had energy stocks moving to the upside, and pretty much the rest of the market was languishing. We did have one stock that was bucking the trend of the weakness. That was Tesla. And we actually day traded Tesla for a nice winner today. Let's dive into our sectors. You can see we had energy trading up 3.61%. That is now in our top momentum slot. Energy has so far a 7.05% weekly performance. And I'm noticing just from being on Twitter Spaces, from kind of seeing what's being posted out there online by traders, it seems like everyone is now flocking into energy. So I actually did go ahead. I closed out my OXY call options today, for better or worse. We'll have to see what happens. We do have clean energy solar stocks that are in our number 2 slot. They finished up 0.71%. We had genomics with a strong finish, up 1.82%. KWEB, this is definitely an area to monitor, these Chinese equities. You can see they closed pretty much very close to the highs of the day. But then mixed in there, we did have a bunch of weak sectors as well. So this tape today was very mixed after a brutal 2 days in a row. Style factors, we did have the high beta style factor finish up 0.48%. And then you can see these international style factors, international momentum and international value, all closed positive. In terms of the laggards, we did see quality as well as defensives and Minvol lagging. So perhaps that's a good thing that money's rotating out of Minvol in favor of high beta. But overall, this still looks like a pretty indecisive picture. A picture that's actually pretty tough for me to decipher. And when that is the case, I try to just be as slow and measured with what I'm doing as possible. S&P 500 again, look at this. I remember in yesterday's video, we were talking about, some people were saying, oh, this is just a little technical pullback in the market. And it doesn't look like this when it's just like a routine pullback. If this was a little routine baby pullback, we would have held the 20-day simple moving average, but we did not. We actually cascaded below it. And yeah, today's candle, another red candle. So this is 1, 2, 3 consecutive. And keep in mind, another reason why I lightened up on short positions is because even if you're in a very bearish sequence, there's always periodic pullbacks to the 5-day EMA. These moving averages, they work the same way on the way down as they do on the way up. So do I think there's a fantastic risk reward of entering fresh shorts at these levels? Probably not, but the predominant short-term trend is to the downside. So there's nuance there. There is nuance in trading. And that's what makes it so difficult. And the fact that it's difficult, that is actually our moat. That's the best part about it. That if people want to succeed and if they want to compete with us, they have to really understand a lot of these nuances. On the weekly chart as well, we see we're trading below this yearly point of control. That is a key level that we've battled for the entire year. This is We've interacted with that level about 11 times on this weekly chart. And yeah, to be honest, I am thinking that we could get a retest of this yearly value area low at 4,059.25. Now, is that going to happen tomorrow? I don't really think so. But it does seem that during this weak seasonal period of September that we're approaching, it seems pretty likely that we could get there. So yeah, we also have the pace of quantitative tightening is going to double in September. So we've got not exactly like great things to look forward to. And that's very important to just be cognizant of in terms of your risk exposure. There's always those times, and we just had one of those times where we shorted the market, where you dial things up to 100 and you move at max pace. But for the most part, you want to be operating at about like a 65 to a 70% pace in markets if you are an active trader. That way, when the time comes, you can really put your foot to the pedal. Nasdaq also looks pretty weak. And look at this, we're starting to find ourselves in no man's land. We're in between the 20-day simple moving average and the 50-day simple moving average. And for me, it's a coin toss right now if we're going to the 20-day next or if we're going to the 50-day next. So again, just very ambiguous conditions. Russell 2000 also trading below that 20-day simple moving average. And our Dow Jones is also kind of just in a malaise below the 20-day simple moving average. Crude oil did have a nice rally today. And again, I see everyone starting to get super excited about crude and these energy stocks right as crude runs into resistance, which is funny. So yeah, ran into resistance. I actually closed out my OXY call options today. And the reason being is just OXY, it's had a really nice run over the past couple days. You know, we entered this position about a week ago and it's really just performed very nicely so far. But my target for OXY really was like, hey, maybe we can get up to this Venom R1 pivot. You know, that would be great. And lo and behold, we reached pretty much the Venom R2 pivot. See, I ended up taking off my call options here. And you can see that over here. I did do a lot of trading today. Today was actually a pretty solid day as well. Yeah, so take a look here. I closed out the OXY. I had the January 20th 65 strike calls. I closed those out for 15 bucks. I had paid $8.54 for those. And I just put here, OXY could still move higher, but I want to lock up the gains in this -3 environment. We wrote here, OXY hit our R2 pivot level, and crude is hitting resistance as we speak. And this is the kicker. There's no guarantee that energy is going to continue to rally. Just because it was the strongest group today, you know, there's no guarantees. But what I could guarantee in that moment is locking up almost a 100% winner on those call options. That's what we did for today. And then take a look as well. We did get some reprieve in the dollar index, which is good. So we have our DXY. But even as I look at this candle, look at this red candle. Is this like a full reassurance that, oh my gosh, the dollar strength is gone? No, this is just a pullback to the 5-day EMA. So right now, this is really nothing that we can hang our hat on over the next couple days, depending on what Jerome Powell says at Jackson Hole. Could the dollar index flap to 110? Yeah, it could certainly happen. Could it break down as well? It could certainly happen. But for me, as I look at this right now, it's a coin flip. So my trend model is at a -3. And then pretty much all of these risk factors that I'm noticing, they're all just like coin flips. Hey, maybe this happens and it blows up the market. Maybe not. And that's where I want to be more cautious. So now that we've hammered that in, let's go through our trades real quick, the rest of our trades. So I did get long the Tesla common shares in the pre-market. And this was right after the news just broke about the Tesla or the Twitter whistleblower case involving the spam bots. I wrote here, this is causing Twitter to trade negative in the pre-market. Since the merger situation, Twitter and Tesla, they've had this inverse correlation. So I wrote here, this was at 7:59 a.m. that I entered Tesla, seeing if I can take a day trade out of this name. And yeah, Tesla ended up being, if we go back to our heat map, this was the best performer in the S&P 500 other than, you know, some of these energy stocks, or at least one of the best performers. So that was good. Closed out half of that trade for a nice little base hit winner. Closed out another 25%. Closed out the final piece for 894.15. What else did we do? I got long the Palo Alto common shares. Let's take a look at Palo Alto. This one looked pretty good today. Palo Alto. Yeah, nice candle, nice power earnings gap. And this stock, they beat on their earnings and sales, and they also announced they're going to be doing a 3-for-1 stock split. That oftentimes does catalyze moves higher. And you can see we have a VPOC up there at 613.1. And what do we got on this weekly chart? Yeah, and you can see on the weekly chart, we're actually pretty close to the highs. So this is the kind of name where, hey, this is one I will stick my neck out, because out of the whole landscape, this one actually looks like it could be an A+ setup. So this is really like the one big long exposure that I have on right now. And if we get stopped out of it, that's perfectly fine. It was, I see this one as being worth taking a shot at, worth taking the risk. And then in the afternoon, we did get long some ENVX. One of our members actually brought this one to our attention. And this one looks pretty solid. Put on a very small position in here. But you can see ENVX. This is a lithium battery producer. And it's just forming a nice little chart pattern. And you can see it looks like it tried to put in a hammer candle today. So enter this one very small. And then I did have to do some adjustments on the option side. So we already covered this trade in OXY. Or we took a winner. That's great. Almost a double. It's fantastic. But we did have to get our hands dirty today, team. And we did break the win streak. I was looking through my trading results, and I've been on, I believe it's a 25 or 26 trade win streak. It's tough to believe, but you guys have seen every trade on these recap videos, and Disney ended up breaking the streak. So Disney, we got along the September 16th 115 calls for $4.15. We had taken out a VPOC on the hourly chart. And it's a name I wanted to enter, whatever. So I took a shot at it because at 9:49, I really was of the mindset, hey, we've just had a brutal few days in the market. Maybe we actually have a bounce. So I took that one for a long trade. But then Disney really just did not cooperate throughout the day. Price action was sluggish. It was being weighed down by the market, perhaps. So I ended up closing that out at $225 for $3.90. I had paid $4.15 for those. So is it a bad loss? No, not at all. This is like incredibly nice and tight for an options trade. And it's so funny, man. Like, now that I've been on this win streak, this is the longest trading win streak I've ever had in my career. This was like insane. I started to get like stressed out about it because I'm like, oh my gosh, when am I going to lose a trade? And so I'm actually kind of glad, like, we just snapped it. There's no mental block. Now we got a nice fresh slate. Anyway, that was a pretty fantastic journey. And for everyone that was watching that streak, you guys are awesome. Thank you so much for honestly just supporting what we're doing here and, just giving these videos a look. And then the other trade that we put on, we sold the Array September 16th 17.5 strike puts for 65 cents. Also sold more of those puts for 75 cents. And Array, take a look at the candle it put in. We'll end off here for today. So that was really my last trade. Array put in a very nice hammer candle and it undercut the 20-day simple moving average. This is solar stock, which has been one of our strongest groups. And we sold the 17.5 strike calls, collected about 68 cents for those. So I will end up getting long Array if the stock moves down to 17.5, and my cost basis will end up being, whatever it is, like $16.70 or, whatever, $16.80, somewhere around there, 85. So yeah, I feel pretty comfortable with that, even if the market declines, which I do believe it might. Then I'll end up taking delivery of those common shares, which I can live with. So yeah, in this environment, honestly, just trying to play it safe. I'm in about 80% cash still. And yeah, that's about it. This is not an environment where like I'm trying to make a ton of money every day. I think that's super tough for most traders to comprehend, that you can have days and weeks and even months where your goal is not really to make money, where it's just preserve capital, preserve the mental capital, because your big fat pitch is going to come. And that when it comes, you can take advantage. That's really what I'm waiting for. That being said, that about does it for tonight's market recap video. Thank you so much for tuning in, and as always, we'll see you all tomorrow.